2 weeks ago, we said Dell would sell the beat. The stock added 33% the next day and is now up 100% over 20 days, the most wrong call we've ever recorded. I have to admit, seeing a stock completely double its value in a 20-day window right after we called a pullback is humbling. We simply misjudged the sheer force of the incoming demand. This scorecard tracks our 6 calls. While Dell missed, the system works. Marvell dropped 5% and Lumentum fell 10%, confirming our calls. Micron surged 80% on memory scarcity. Our cooling and power thesis remains pending, with names like Vertiv Flat. So yes, we failed the Dell test, but looking at the exact numbers across this scorecard exposes a massive bifurcation in the market. That split makes Broadcom's upcoming earnings print the ultimate test of our sharpened sell the beat rule. To figure out exactly what happened with Dell, we have to isolate the winners in the chip layer. Marvell ran 27%, but beat its guide by only 4%, triggering a sell-off. Dell's massive 48% run-up priced in an 8 to 10% beat. Yet Dell raised its guide from $140 to $167 billion, a staggering 19% raise. The rule didn't break, we just found its boundary. Sell the beat is conditional. The pattern only triggers when the magnitude of the earnings beat is smaller than the preprint run-up. Because Dell's surprise was practically twice as large as the already high expectations, the stock rallied instead of selling. It proved the market's appetite for AI compute is simply outpacing the pre-earnings hype. That explains the compute side, but we have to look at why the other half of the trade stalled out. Comparing the chip layer directly against the physical layer, the divergence is extreme. The top 6 silicon names surged 24 to 100%. But the physical layer, NextEra, Train, Carrier, is down 6% on average. That leaves a massive 60-point spread. This is the exact same AI thesis producing opposite tape. Investors are aggressively paying up for the compute power, the chips, and the servers. But they are ignoring the kilowatts and the cooling systems that actually keep those servers running. For this rally to broaden out and remain healthy, that physical layer has to start repricing. The setup heading into Broadcom's earnings will tell us if that shift is starting or if the money is staying locked entirely in silicon. All of this brings us to the next major catalyst. Broadcom reports on Wednesday, June 3rd. This bar chart shows exactly why Broadcom is the inverse of the Dell setup. The stock is currently trading near $446. That sits $62 below the mean analyst target of $508. Instead of a massive pre-earnings spike, Broadcom enters this print with only a 6% run-up over the last 20 days and an RSI sitting comfortably in the mid-60s. There is plenty of room to surprise to the upside. Let's weigh the AI basket. Their concerns are heavy, with massive RSI exhaustion across the chip layer and a cumulative $1.2 billion in insider selling. On the bull side, Dell heavily validated end market demand, 5 calls remain confirmed, and Broadcom enters relatively cheap. The net score gives the bulls a +1 advantage. This is the most balanced setup we've graded all cycle. Broadcom's print will decide if the momentum concentrates further into chips or finally breaks into the rest of the ecosystem. So here's the specific data we are watching this week to map the next move. This chart outlines 3 distinct triggers on the calendar. First, on Wednesday after the close, Broadcom needs to report AI semiconductor revenue above $5.5 billion, and they need to raise their full year 26 guide by more than 6%. That 6% threshold is critical. If the guide raise comes in under 6%, our sharpen sell the beat rule will immediately trigger. Second, we watch the physical layer. If Broadcom posts strong numbers, do the cooling and power names finally catch a bid on Thursday or Friday? If they don't, the structural lag is hardening. Third is the Friday morning jobs report at 8:30 Eastern. A hot print with over 200,000 jobs will push yields up, directly pressuring the AI multiple across the board. The main lesson here is mathematical. The absolute size of the beat doesn't dictate the market reaction. How the beat compares to the pre-print run-up is the only math that actually matters right now. Dell taught us the hard way. We will grade Broadcom Thursday morning at the open. Read the full breakdown at marketdecode.ai.